It's time for Michigan's retirement coach, Mike Douglas.
When you go to retirement, when you get into retirement, your retirement should not swing at the pace of headlines, how fast those headlines change. What you need is a plan to prevent that from happening. This is what Mike and his team build every single day for folks here in Grand Rapids. They can build for you as well. So if you've got questions, if you want to have a retirement that's not determined by the news headlines, let's get to work. Find us at michigansretirementcoach.com. Or as you're listening today, if you want to put a time on Mike's calendar, you can give us a call at 616-512-2127. So other recent headlines, the oil price conversation has obviously come to the forefront. Rising prices becoming a real economic threat. Moody's economist Mark Zandi is saying that if oil climbs to $125 a barrel and stays there, gas prices nationwide could surge above $4 a gallon, which could be enough to tip the U.S. into a recession. Meanwhile, Goldman Sachs now puts the odds of a recession at 30%. And the VIX index, which is Wall Street's fear gauge, VIX is normally sitting around 13, Mike, but as of recent days and weeks, we've seen it above 20. So we've got a lot of investors that are feeling frozen right now. There's just that analysis paralysis. Maybe they're thinking to themselves, well, I'm going to wait till, the White House administration changes, or I'm going to wait till the war in Iran ends, or any other number of things. Pick your headline. I'm going to wait till that's over. People don't want to buy. They don't want to sell. They don't want to adjust. But should they, are they missing opportunity? What should we be focusing on? What should we be doing?
Well, we know the rules of investing, like we all do. So we know that you're supposed to buy low and you're supposed to sell high. Mm-hmm. And then what happens is we're invested and the market goes down. And it gets to a certain place where people say, you know what, I want to get out. That way I don't lose any more money, which is a selling low.
Yep.
And then the market recovers to the point where they're comfortable to reinvest and it's higher.
Lost, yeah.
And so now we say, I'm going to buy now, even though it's high.
Yeah.
So we know the right thing to do. We just struggled to deal with that decision. I'm not saying that you have to lose everything or you have to be willing to ride the roller coaster all the way through. I just know that we have to have a pragmatic mindset as we deal with appropriate market planning. I just had a client recently who came in and, one of the big conversations, I say that just came in, this was back late last year. Mm-hmm. And the reason was, I just want to wait till things settle down. And I asked him, when exactly do you think that will be?
Because if we do the quick math over the history of the past few years, let's go back to 2020.
Yeah.
When we've been waiting a long time for things to settle down and they have not settled. So what if it never does?
Yeah. And interestingly, the market crashed 4 times during President Trump's first term. It crashed 2 times during President Biden's term. Mm-hmm. And now it's going through another reset to start this year with the war in Iran. Mm-hmm. And there's just a lot of stuff going on. And so we have to have a mentality that it's not going to ever fully settle down, unless you get on the back end of a real recession. To be part of a market that doesn't really have any negatives, you have to be part on the back end of a really big negative. Think like 2009. The market crashed in 2008, the first quarter of 2009. And then from 2009 to 2016, we basically had a really, really nice market for a long time. However, in that time frame, we were recovering from a 55% loss. So that's what it takes to have a constantly good market. So I told him, I said, when's it going to be good? Because the reality is markets are almost never clear. There's always something going on. Inflation, elections, wars, interest rates. Instead of waiting, we kind of focused on what he could control and rebalancing his portfolio, adjusting his income plan, and doing tax planning while the markets were still being volatile. So that was several months ago. And now as we sit and talk, I did a review with him just recently. Mm-hmm. He said, I'm glad we didn't sit still. I feel like we're actually taking advantage of uncertainty.
That's good.
And I said, yeah, that's exactly right.
Yeah.
Now, again, we are not putting risk to his monthly paycheck. We are not making it so if the market dips, he doesn't get to go on vacation. What we're doing is saying, if the market goes negative, here's how we participate appropriately. If the market goes positive, here's how we participate appropriately. And doing it in a way that he doesn't have to worry month by month, do we need to recalibrate constantly? So number one, I think you just got to control what you can control. And so many people feel like they don't have control over their portfolio. They don't understand. Maybe it's not built for these volatile times. And if that's you and you say, I'm like your client, I want to wait till things settle down, but I know I can't. I just need someone to help me navigate those waters. Give us a call. We can help you figure that out. 616-512-2127 is our phone number. You can call us and set up a time to talk to me, and we'll help you figure out what makes sense for you. Or you can reach out to us at michigansretirementcoach.com. And again, just click on the button there, start your retirement roadmap today, and we'll see if we can get a conversation scheduled between you and I to understand your situation. And then just say, all right, well, I get why you're concerned. And have that very real conversation of when will it settle down? When is it okay to invest? When is it okay to be part of the market? And just make sure that you can be like our client who also came back around and said, I'm glad we decided to take advantage of uncertainty.
Got it.
That's what a good retirement plan looks like.
Yeah.
So number one, control what you can control. You can't control oil prices or global events, but you can control your allocation, your risk level, and your tax strategy. Uncertainty doesn't remove opportunity. It just shifts where opportunity is. So you can understand that and have good portfolio solutions for that. So number one, control what you can control.
Yep.
Number two, volatility creates opportunity. Market pullbacks can be used for rebalancing, tax loss harvesting, strategic Roth conversions. Converting when the market's down allows you to get a really nice run up when the market recovers in a Roth account. So that can be a good thing. These are moves you can't make as effectively when markets are calm. So the same volatility people fear often creates the best planning opportunities. So understand that a volatile market, for those who have a good plan and strategy for it, is a good thing, and it can build your portfolio up. Number three, doing nothing is still a decision. Sitting still isn't neutral. It's a choice. And sometimes it's the most expensive choice, especially if your plan needs adjustments for risk or income. So a lot of times people say, all right, well, the market's going south. I'm not going to sell out, but I'm also not going to change. I'm just going to wait this thing out. But all the while, you can see things like a great example is oil pricing, right? So we saw as soon as this Iran crisis started, holy cow, this is going to be very volatile for oil. And what happens when oil supply is restricted? Oil prices go up. So if you own oil stocks, they do really, really well. And so that's a great opportunity. And so we shifted that. Last year, gold and silver, great opportunity. So there are things you can do to participate without getting extra risky, but just allocate to where opportunity lies. But doing nothing is a decision. You're deciding not to participate in it. How we help people move forward is we take the emotion and bring it back to the plan. We take the emotion, and again, I say this all the time, and I mean it 100%. You should be emotional about your retirement.
Right.
It's your life savings.
Right.
It's everything you've been working for. It's all of your 40 years in the workforce put onto one piece of paper. And people say, don't get emotional about that. What are you talking about? It's okay to be emotional about your retirement, just not emotional in your retirement investment decisions. So use that emotion to understand who you are and what you want life to look like, and then bring back the plan and make sure the plan accomplishes the goals, which is don't do this or do that, right? So we want to make sure it's built for who you are. We want to take the emotion out, bring it back to the plan, stress test portfolios for the worst case scenarios. We want to identify opportunities, right? Take the current conditions. What do we do now if the Strait of Hormuz is open, which again, none of us ever really talked about ever before the last 2 months. A lot of people hadn't even heard of the Strait of Hormuz, much less now it's like, oh, everybody's a genius on it, right? But the Strait of
Googled
Hormuz,
it. I know things.
Oh, exactly. I've read at least 2 articles now, so I'm pretty much an expert.
Basically. I'm basically the inventor of the Strait.
Yeah. And so, but with that, if you see the Strait of Hormuz open up and oil is going to go back to where it was, it might be a good time to get out of your oil stocks and go into something else and find ways to shift money towards what's going to be profitable. Those are all things that happen. Make adjustments based on your timeline, not on the news cycle. Understand who you are and what you want life to look like. If you're feeling frozen right now, I understand. You're not alone. We are having these conversations. People call in from this program all the time and say, I just don't know what to do. And I just keep being told to be patient and hang on, which is really annoying advice to hear when you're paying someone a fee and they're telling you, I think we should do nothing during volatile times.
Right.
They don't want to be opportunistic. They are just covering the big box financials butt. That's all they're doing. They're saying, hey, they work for some big firm. And as a result, they're being told by their people, hang tight, don't let your people sell out or take their money out of the market. On our end, we say, all right, the market's pulling back. Where is growth happening and how can we reposition towards that? And where should we be hedging and being safer? How can we build towards that? How much is my client's income affected by this Iranian conflict? That's what we need to figure out. If I have an Iranian conflict is making it so you can't do your planned trips this year, or makes you uncertain, not because you were planning to go to Israel and that seems unsafe, but because you were going to go on a cruise, but now the market's down 10% and you don't feel like you can financially do it. That's unacceptable. We can build plans. We do them all the time that says, if the market's good, here's how you knock off your bucket list. If the market's bad, here's how you still knock off your bucket list. So that's what a good plan looks like. We need to take a look at your plan, identify what you can control, where the opportunity exists, so you can move forward with confidence instead of waiting on headlines to turn your life around. Give us a call, 616-512-2127. We'll have a conversation, you and I on the phone, talking about what your life looks like, what you want it to look like, and show you how to map out a life plan for yourself, a plan for your investments, risk, taxes, estate planning, legacy planning, long-term care planning, all these things. But at the end of the day, knowing that no matter what happens in the market or what the headlines may say, you still get to live your retirement life the right way. Give us a call, 616-512-2127, or reach out to us at michigansretirementcoach.com.
Something else we have seen in the news, Mike, lots of stories lately about big tax refunds this year. I'm assuming because of the changes that happened with the One Big Beautiful Bill Act. Is that what the news is?
Yeah, there's a lot of that. There's also a lot of people. Yeah, the Social Security, a lot of things changed.
Okay.
And those who used it properly are definitely getting benefits from it.
Well, many still found themselves writing a check to the IRS when they thought it was going to be different. They thought that they were going to get this refund this year. There was an article on savingadvice.com. It says that it's becoming more common for retirees. They're owing, even though it doesn't feel like their income has changed all that much. So what's happening here? How do you help people plan ahead so that they are not continuing to write these checks, even if they thought they were going to be getting refunds? What's the situation?
Well, here's a great example of proactive versus reactive planning.
Yeah.
The One Big Beautiful Bill Act was signed in July of last year. And here we are in April, and people are finding out the news about it, of how it did or didn't affect their portfolio. That's super frustrating, especially when you pay a tax professional or you pay a financial advisor to watch over your money and they don't tell you the things you can and can't do with the new tax bill because it's complicated or because it's really hard to read or because I don't do tax, I just do investments or whatever excuse you get. The reality is this: we had opportunities in 2025 that came from the One Big Beautiful Bill Act. Once that went into place in July, they were retroactive back to January. So there's a lot of stuff that we were able to do for clients saying, hey, let's look at the tax code and use it to your advantage. I say all the time, the tax code is just like playing Monopoly. There's rules and there's strategy. And if you know the rules, you can have a better strategy and you can play to win. That's what happened last year. There were things that you could write off. There were things that you could participate in, especially if you're a small business owner or if you're a retiree. A lot of people don't even realize that now in Michigan, if your income's below married filing jointly about $125,000, and again, there's some detailed nuance to this, you may not have to pay any state tax on your IRA distributions. We are helping people get their income, again, and there's a wild difference between the income you receive and what gets reported on your tax returns.
Okay.
I'm not talking about cheating the IRS.
Right.
I'm talking about how you structure your income in a way that how much has to be reported. If we can get your reported income under certain thresholds, your IRAs can come out tax-free up to a certain extent. So if you have an RMD that has to come out every year, the required distribution, if we rework your income, we can make it where the state says you don't have to pay any state income tax on that IRA distribution. Well, that's a 4.25% savings right out of the gate. Now, a lot of people are finding out that after the fact. Why am I getting such a big refund? Because you gave the government a free loan all year last year that you didn't have to do. Why is this happening? Well, because you didn't know the rules of the tax code and neither of your professionals reached out to get it fixed. There's a lot going on. Again, if you're a small business owner, golly, the One Big Beautiful Bill Act really changed the game for so many people. And a lot of people think, well, it's only these big corporations. No, I'm telling you, small businesses got a ton of opportunities to radically change their tax portfolio and really invest more money in their company and their families than they have to invest in taxes. That is free money given back to you, because once you get it to the government, you rarely get it back. So I think that's a really important thing, and people don't realize that. The problem wasn't the tax bill. It's just the lack of professional communication about it. We had a client come in after last year's tax season. He was frustrated. He says, I'm not even working anymore. How am I paying more in taxes? And we went through. Now, he was just becoming a client, and he had not been with us the previous year. And we went through and we did some digging into his taxes. And he had this non-qualified account, a couple $1 million in a non-qualified brokerage. And the advisor was just freely trading in and out of positions, trying to use a highly managed portfolio to get maximum returns. But as a result, was generating all of this short-term capital gains. It's a very nerdy way of saying a lot of ordinary income tax.
Okay.
So he ended up paying about $40,000 in taxes on all these gains. And the advisor says, well, good news is you're only paying it because we made you a bunch of money. Well, then when we dug into it, said you're paying $40,000 in taxes. And if you had just let these things be held an extra 30 or 40 days, you could have paid a fraction of that by making it long-term. There's a lot of little strategies. When you buy and sell, it's not just about what is the price, but is what is the after-tax results.
Yeah.
There are things that are happening that people don't realize.
Yeah.
If I sell this position and I go on a cruise off that money, and the cruise is 15 grand, but I have to pay an extra $3,000 or $4,000 in taxes on the income I get from it. Now I just paid 20 grand for this cruise. There's a lot of strategies there that can be used to fix it. When we went through his portfolio and we said, you're paying taxes on money you're not even getting income out of, he was pretty frustrated. And we went through and said, if we just do this, just do that, we could take that $40,000 in taxes and bring it down to about 12, right? Couldn't eliminate the tax completely. Sometimes we can, but we couldn't eliminate it completely. But man, we were able to bring it way down.
Sure.
And during this current market correction, again, when markets pull back, we look for opportunities, and we are doing tax harvesting. We are taking money that hasn't been taxed, paying taxes on it at a discounted rate, and eliminating it from people's portfolios. There are great things you can do with taxes, whether it's your tax return and why they're owing more because the money management wasn't done properly, or because they weren't using a proactive tax strategy. Looking in advance, where does the market hold? How much do I pay on this income? If I want to remodel my kitchen in 2 years, should I be paying taxes on gains now and setting that money aside because of the discounted rate, because of the Iranian conflict has lowered the market? You know, there's a lot you can do. The new Social Security tax breaks also went into effect last year. You should be using those to your advantage. There's a lot that goes into it, and you need a strategy that's current for you, for your family. If you want to have a tax strategy that's built to last, built to keep more money in your pocket, give us a call, 616-512-2127. We will help you do taxes when it benefits you, not the government. 616-512-2127, or reach out to us at michigansretirementcoach.com.
Gosh, one of the things, I guess we don't talk about it on the radio. You and I have all these conversations about our health off air. We come onto Wood Radio and we talk financial health. But you and I are on a health journey.
Yep.
And it's just phase of life. We're both in our 40s now. We are both hitting that midlife stride and just trying to figure out why we can't sleep anymore, man.
Exactly.
So
why
real.
can't I have caffeine past 3 p.m. anymore?
I know.
Why is it that if I eat past 8, all of a sudden I don't sleep well anymore?
Everything hurts.
And yeah, so this is a great one. My kids and I played basketball Monday night. It's my first time back running and playing basketball with them. And the next day we get up and I'm like, I'm sure we're all very beat up from this thing. And the boys, I walk out for breakfast and the boys are out there doing a push-up contest. I'm like, oh, they are not feeling the way I feel. I'm walking
different.
slow and on the sides of my feet. Like I'm trying to like ease everything in my body. And they're out there doing a push-up contest. I'm like, you guys and your young metabolism and recoveries.
Energy's wasted
I'm proud
on
of them
youth.
as athletes, but yeah, it really is.
Well, we're not alone in our journey, in our midlife health journeys. Just the heartburn conversation alone. That's something that I feel like people don't talk about enough. How one day you'll wake up and you suddenly just can't eat anything at all anymore.
Yeah.
Seeking the heartburn relief, another conversation that so many of us have. And the number one over-the-counter heartburn brand, much to the surprise of nobody, would be Tums. Over 60 million bottles and rolls of Tums are sold each year.
Wow.
So comedian Aaron Weber, you may have heard him. He's gotten pretty popular thanks to Nate Bargatze. Yep. He was talking on a stand-up routine, talking about how he knows the Tums situation all too well.
Tums are very good. I don't know if you've had Tums lately. They've gotten, last 10 years have been special. It's borderline top 5 candy in the country right now. They just came out with orange cream. I don't know if y'all get the same emails I do, but new flavor just dropped. Half of them are orange, half of them are cream. And then you can kind of mix and match. That's what Tums does. They let you decide, how strong do you want to go, right? I got a system. I do 2 orange, 1 cream. I put some M&Ms in there. It's good. It's tearing me up, but I'm enjoying the ride.
I don't know. He needs to M&Ms with the orange. Is that a good combination?
I watch him enough on podcasts to know if he's got something cooking, it's probably good. But it does seem very strong.
That seems like a strong flavor combination. All right. So all jokes aside, when it comes to mixing things and creating the proper concoctions, the proper lineup of situations to our benefit, income in retirement is often mixed. There's lots of moving parts. There's mixed opportunities, but it can be complicated. It can be kind of like accidentally taking an orange Tums and a mint Tums together at the same time if you haven't lined things up right. And you're like, ooh, that's no good. Don't like that. How do you help people figure out how to build out the right retirement income mix for their retirement plan?
I think the big thing is to realize that there's no perfect investment. There's no perfect answer. There's no one golden ticket Willy Wonka style that's like, if I just do this, it'll never go wrong. And depending on who's giving you the advice that, is soliciting you to give you the advice, you have to be careful of that too, because there's just so many ways you can do it. I had a client who came in, and as we're walking through, his entire retirement plan was his 401k. And that was his one flavor. Okay. And again, he was just working. A GM guy, had worked for years, had his 401k plan. And now as he's retiring, he used to be with kind of a big box firm, one of the national brand firms. And they said, you've got a solid portfolio, just withdraw from it as needed. Mm-hmm. That was it. Mm-hmm. They're like, how much do you want? He goes, how much can I take? I don't know. How much do you want? And it was a back and forth conversation without any direction. Yeah. I mean, imagine you going to the doctor and you ask the doctor, hey, I'm feeling sick. I need your advice. He goes, well, what do you want to do? I say, I want to feel better. Right. Yeah, you should take some medicine. What medicine should I take? Which one do you want to take? Like, what kind is this? Is this like a? Yeah. Is this a bit? Like, am I like a Abbott and Costello bit? Like, I don't understand what's happening right now. Yeah. And that's what happens with financial advisors. Mm-hmm. You walk in to an advisor looking for direction and advice, and instead they give you multiple choice answers, and you can choose your own path. But most people are looking for direction. Mm-hmm. And that's a frustration. They go in and they trust the big name on the sign. And when they walk in there, the person says, well, I can't give you tax advice. I'm not a tax person. I can't do your estate plan. I'm not an estate planning person. I'm an investment guy. All right, well, how much income can I take from my investments? Well, it depends on how much you want to take. Like, it's just such a generic runaround. Yeah. And with him, that was his frustration. He had his 401k. He had rolled it out of GM. And now he's got this big box firm telling him, well, what do you want to do? When we dug deeper, we realized that he didn't understand the fact that his entire retirement was dependent on the market. He had no clue. The way it was described to him as, we could probably take out 4%, maybe 5% a year and be okay. But the timing, the volatility, the taxes, all these things factor into when and where and how you should pull out of the market or pull out of your portfolio to live off of. So when we rebuilt his plan, we said, all right, you have Social Security. That's your base. How do you want to get the rest of your income? He has no idea. I said, all right, well, here's our options. We can do this. I recommend this suggestion. If you want guaranteed, if you want it just like a pension, then we can go get an annuity that makes sense for you. What do you want to do? And so as we went through it again, he said, what do you suggest? I said, based on you, your comfort and your risk, I suggest we get an annuity to give you the income you'd like. And again, not with all your money, because some people say put all in annuity, and that's garbage too. We said, we solve for income. You need $30,000 a year of income. If we put this amount into an indexed annuity, it will give you that income contractually guaranteed the rest of your life, regardless of the market. Mm-hmm. If that's acceptable, then that's what I recommend. And so that's the route we went. We said, here's what makes sense. So Social Security plus a portion of his 401k committed to an indexed annuity, gave him all the income he could ever want. Then the balance of his 401k, we invested in appropriate durations of funds. Some money that'll get him spending for 5 years, 10 years, 15 years. And we balanced his portfolio. And then we constantly are readjusting it. We use structured withdrawals from investments, flexibility for some cash reserves. There's a lot we did. Well, about a year later, he comes in. And as we're doing our annual review, I said, how was your first year? Welcome to your first, your 1 year anniversary with Life Plan. How does it feel? He says, I just don't feel like I'm guessing anymore, which is nice. Mm-hmm. I feel like I know. Mm-hmm. He said, that's the biggest difference. And that is a big difference. It's a comfort. So there's a lot of people who feel like they're guessing and they're hoping they guess right. And yet that's just like going to a doctor and guessing your own medicine. Nobody would do that with their body, but yet we do it with our investments all the time. Don't live life that way. Yeah. Give us a call, 616-512-2127. We'll have the conversation to understand who you are, do that intake conversation, and get a feeling for you. And then we can help you figure out the best method for you and your family. But understand how you get income matters. Social Security is a foundation. It's an income that's going to be there unless they cut part of it. You have your investments. You have guaranteed income. You have optional income. Do you want to do rentals or do you want to work some more? Or do you want to, no single source should carry your retirement, but yet we're told by people the 401k should last and you'll be okay. So I just disagree with that philosophy that we leave anybody's retirement up to should be or up to the market. I think we can do better as an industry. And I think that independent local advisors are doing that in a way that big box firms can't. So that's my thoughts. I think that you can build a good retirement plan. And that's why I encourage people, give us a call, 616-512-2127, or you can reach out to us at michigansretirementcoach.com and set up a time for us to get together. Now, let me tell you what that looks like. When you call in, there's nothing worse than feeling like you're calling into like the abyss and you're going to randomly never talk to the person you heard from.
Right.
Why? Because you're used to hearing from a big box firm that has some spokesman on the front end and then you talk to an 800 number on the back end.
Yep.
What happens here is when people call into our program, they call to one of our people who are waiting to schedule you on my calendar. And they say, all right, here, let's get a time for you and Mike to meet. And then I call you and maybe it's this Tuesday at 4 or whatever time it is. I call you, you and I have a conversation and we go through and say, all right, I get it. I hear you. I hear your story. I hear where you're at. And here's the advice or recommendations I can give you. And from there, if we should get together and talk in person or however you want it to go, that's how it goes. But it's just nice to know that there's some people who still have direct conversations and it's not all routed through an 800 number or through a different country or through all these different things. Just a conversation with Michigan people talking to Michigan people about how we live life together here, right? Life is different here in Grand Rapids than it is in Detroit, than it is in New York or Chicago or LA or Omaha, Nebraska. Mm-hmm. And it's just nice to know that there's someone out there who listens, who gets it. And so I do love when we're just, I'm talking to someone and I see them and then I run into Meijer and we're both grocery shopping. They say, hey, I just listened to the program this week. And I'm like, well, that's great. I hope I didn't screw it up, and it's just nice to know that there's real people out there still doing real business.
Right.
So that's the thing. A retirement plan built for you, finding the right mix of Tums, as Aaron Weber would say, just knowing that life is meant to be lived together. Yeah. And so that's how we do it at Life Plan. And that's how we do it here in Michigan. So if you'd like to have that conversation, give us a call, 616-512-2127.
Mike and his team, they're here to help guide you through this process because at the end of the day, the goal is that you're going to retire one time. But Mike and his team, they're retiring every single day or helping folks do that. So they got a lot of wealth of knowledge in their pocket that they're ready to share with you. MichigansRetirementCoach.com is our website where you can go to start the conversation with Mike and his team or click on the links we got posted in the show notes.
Thanks for listening to Michigan's Retirement Coach with Mike Douglas. To learn more, visit MichigansRetirementCoach.com.
Michael Douglas is an investment advisor representative of Stewards Wealth Planning, LLC, a registered investment advisor. Financial professionals are not licensed in all 50 states. To find out if Michael Douglas is licensed in your state, please call 517-323-7526. Stewards Wealth Planning, LLC is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Annuity guarantees rely solely on the financial strength and claims-paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Michael B. Douglas, NPN number 9650939.